Hey guys, how's everybody doing? Okay, let's do this. So, hello. This is 50 Pips, 10th of February 2013. Again, not making any trade calls or recommendations. You and only you are responsible for the trades you decide to take. The fact that you're in here means you've read, you understand, you accept all the disclosure and disclaimers here on the website and everywhere else. Understanding that we're performing some technical analysis for learning purposes only in an educational context. Okay, so it's been a while. I've been a bit ill, so voice is back, everything's back. So let's see if we can get through this without any problems with my voice. So I think I'm going to keep it short and sweet this time. So what are we going to do? We're going to try a slightly different approach. And what we're going to do is we're going to do the ES, we're going to Euro, and we're going to do cable, okay? So starting with the ES, what's going on? So clearly we still in this big rotation higher, and we've been talking about the fact that the market looks like it wants to continue to grind and try and move into this broader resistance zone, okay, which is starting at 1539 and goes all the way into those, oops, sorry, wrong, which goes back into these highs, right? And what's interesting here is that we've got a lot of confluence pointing to these targets. So we had that big move here, front run 50 back, 123 extension at those 1539s. Then we have all these smaller moves here that all have extension targets there. So that's why I'm saying that even though we're slowly grinding higher, I'm looking for this, and we've been talking about this for a long time, to move back into those 1539s and break above those, okay? Now, from a bit of more of a tactical framework going into the week, what I'd be looking for is, I think after such a big move, and I've been talking about this, I think the risk reward is clearly for the bigger move or the velocity to come to the downside. That's why we've been talking with the weekly subs, etc. We've been looking at possibly building core shorts for a bigger move down, 20-30 handle down, but we haven't been shy about playing tactical longs intraday. And going into the week here, I think what's clear is that market is coiling, and even though it seems a bit fragile, it seems like the shorts try and get some traction, they can't. I still think we need to fail from a higher level. That's why going into the week, I think the first resistance zone I'm watching is these 1519s into these 1515s into 1519s. Above that, then we start that bigger zone we've talked about but before, which is the 1522 all the way into those 1539 targets. Now, to the downside, to get some real aggressive move, I think we need to clear those 1500s and press below those. So I would really view this 1500 as a kind of a mid zone for the week, right? So even though we press back down, unless we can break and hold below that, especially on day close basis, it's going to be very difficult to get some aggressive move down. Now keep in mind, going into this week, we've got expiry on Friday, and then the Monday is a holiday, so it's a big holiday. So I think broadly speaking is, 1500s, if we start to break below, there'll be a lot of focus at these 1492s, and then the focus is back into 1480s. Again, I'm going to post this chart. This chart is on the blog, you can look at it, but still look for this to continue to grind higher, maybe some moves down, but unless we really clear below the 1500, I think the path of least resistance is for a grind higher. But again, that higher for us is coming in at 1520s, 1530s. So I think the next big move in terms of velocity will definitely come, most likely, I don't like to use definitely, come to the downside. Okay, what's going on Euro? In terms of a broader perspective on Euro, we talked about, we were trading this to the long side. The interesting longs were when we were pressing down 127s, and then all of a sudden a lot of people were getting excited at highs. Now we've been mentioning, as we do every year, to keep an eye out for the January effect, for the fact that we can put in a significant peak or bottom for at least 6 months in January. And what's interesting is that Euro pressed all the way back up into the 50 back of this is a weekly chart, move from 149s back down into those 120s, and it got sold very aggressively in this 50 to 61.8 zone. So far the shorts hit it where we would expect them to come in and cap this, okay? Now, what I would be watching for in terms of the broader perspective now is keep in mind that we could easily correct all the way back down into 128.70s, and still this rotation higher hasn't been, is still completely in play, right? So retracements are healthy, and keep in mind the broader trend, not only from the weekly, but also on the most recent dailies here. I think to the downside, however, before we get there, something which is going to be very interesting to look at is going to be how we react should we move all the way back down into those 3160s, okay? If you move back on the daily, you'll see that these 3160s, 3170s are quite interesting, because it was not only this previous resistance that if the uptrend is going to continue to hold strong, we would expect it to act as support on the way back down, but it will also be pretty much coming in line with the 50 back of this most recent move from lows to highs. So clearly this is a very interesting zone to watch should we get back there on the daily chart. Okay, now in terms of some more tactical levels for the week, if we go back into our tactical chart, what I would be focused on is keep an eye to the upside. The real important level, I think, is those 3450s, and we talked about that on Friday too, that unless we could get a move back above there and a weekly close above, pressure was clearly going to be back on. So I think that's to the upside, the big level which should bring in some more bullish momo to the upside. If we break it, it is going to be that 3450s. If we move back into there and we get sold, this is going to be very much pressure on remaining. Now on the downside, if we open down, if we keep on moving down, before, remember on our last chart what we said, it was to the downside, the big level to the downside to keep an eye out for was that 3170s, right? Before that, however, there's another interesting level, which is going to be these 33s. Now, if you look back on your chart, the 33s have been very important, and they've been pivotal for a long time, and they served as this very strong base. You see all these wicks where the market managed to base and get the strength to continue that next leg higher. So in terms of big bull bear lines going into the week, bears will be defending 3450s, and the bulls will be defending these 33s. To the downside, then the only focus for me is going to be 3170s. To the upside will be those high ranges, but again, I'll post the chart on the blog again, okay? Cable, what's going on cable? So cable's a very interesting chart, because if we go back on the weekly, you'll see that we're still broadly in this big wedge, and the uptrend is still holding, right? So you can see we caught a bid right at that bottom of that trend line, right? So as long as this is holding, don't be surprised to see participants or players for looking for this to be the base for another move back up into this broad consolidating wedge. That's why you might see people talking about 162s, 163s, and even though it might seem strange to some people on the next action, you know, it's very technical. It's been in this broad wedge for a long time, and if we hold those lows we've put in, then again, I'd be looking for an attempt to rotate back higher into that broader level, right? So of course, we're going to have to keep a very close eye here on this triple top, this clear area where sellers were very, very aggressive. But at the moment, as long as those lows hold, it looks like the cable will try to rotate back up, maybe possibly into these 162.50s, okay? Now, in terms of tactical trading, and the rotation was pretty pure. You can see this. This is a chart. It's up on the blog, so you can look on the blog. We'll post an update if anything changes. But right here, what's interesting is you see we come back into that double bottom that is forming right at those lows. We hold that double bottom. Price tries to break lower. It can't. It forms a very nice base, and that's why on Twitter we were talking about two levels all the time: 57.70s into 57.90s, and then the 58.80s. Those are the two levels I've been hammering on about. And what we said is they're going to be the pivotal levels for rotation back higher. Now what's happened is we built on that low, we came back up, and we broke through these. You see this big On the move back up, sellers coming in, trying to protect it once, and right now protecting it again. So first level to watch going into the week is this 5790s, 5770s, right? If we move back below, then we could see some pressure on for a move back into the mid of this range into 5720s. 5700s will likely be pivotal, but as long as we hold above these 5790s, then I would be looking for the market to move back up into 5880s to challenge this very, very strong level, which is going to be pivotal if it can continue its rotation higher. And if we break that, then I'll be looking for 160s to print this week. So again, these are the most interesting levels I'd watch. On the move back down, some people will be looking at the 50% back here, and you see it's coming in at 5730s. I prefer to have the 5700s. I'll definitely be looking at that level, but I prefer to have a 5700 as a more important line here. So that's what I would be looking at if we can't break and we start to get some bearish Momo below those 5770s. Okay, so I hope that gives you a bit of structure, a bit of levels to look at the week with, and I hope everybody has a great Sunday. See you guys bright and early tomorrow for London Open. Have a great one. Take care. Thanks for listening, and don't be shy about sharing the content if you enjoy it. Okay, bye bye guys.